Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Tuesday afternoon. I'm Juliette Sarley. Great to have your company. Well, we kind of treaded water a little bit today. Not much momentum as we head into the close. The CBO 200 there is pretty flat. Completely there, I should say, flat, and the S&P ASX 200 heading into match off down just 6 points lower to 8,946. Of course, continuing to monitor this upcoming ceasefire deadline and potentially a little bit of uncertainty ahead of that as traders continue to await the US-Iran outcome. But really, not much happened in terms of big swings for the market today. Brent crude giving back some of those earlier gains, around $95 a barrel. So this shift really as to whether or not the US and Iran can resume negotiations in Pakistan to calm these strains and fully reopen the Strait of Hormuz. So getting to our themes of the day, that is really what we're looking at, the peace progress with a question mark next to it, hoping that there will be a resolution. In terms of economic data, we had that weekly consumer confidence survey coming through from ANZ Roy Morgan, still showing that it is at its fourth lowest level on records going back to 1973. And interestingly, weekly inflation expectations rose to 7.1% last week. So that's their third highest result since the series began back in 2010. And this is all on the back of what we heard from the RBA Deputy Governor, Andrew Hauser, last week in New York, really warning that inflation is still too high, highlighting the importance of keeping inflation expectations anchored. So we are awaiting that May rate hike. And our friends across the Tasman could also get a rate hike because we had CPI, quarterly CPI, showing New Zealand's annual inflation rate unchanged at 3.1% in the first quarter, above where the RBNZ likes it and really defying these expectations for a slowdown. And then, of course, we're watching Warsh midnight tonight our time. Kevin Warsh will give that speech, that delivery to the US Senate Banking Committee. Let's have a look at where the sectors have finished the day's trade, kicking it off with the miners. Rio Tinto having a good day. It had an update today. The others all a little bit weaker, particularly a lot of those iron ore players. Flipping it over and having a look at the gold stocks, which were mostly lower as well. We have seen gold prices actually at a 1 week low. This is Iran's threat of retaliation to the US takeover of an Iranian cargo vessel drove the dollar and those oil prices high in Monday's session. And then having a look at tech stocks, mostly well bid today. Macquarie Tech there up by about 3.4%. I mentioned Rio Tinto was doing well. It had copper production coming in 4 to 6% ahead of estimates. Iron ore production holding up against a cyclone in the March quarter. Hub24 did not have a good day. Its March quarter net inflows missed expectations by 8%, driven by weaker gross flows and a one-off institutional withdrawal. We also had an update from Challenger. It narrowed its full-year earnings guidance for the 2026 fiscal year to 66 to 70 cents a share amid the market volatility. Macquarie Group, though, it is getting very close to all-time highs. Its all-time high set in January last year was $242.90. It's at $241.22. And James Hardie did well, even though it could be facing a potential class action, according to law firm Morris Blackburn. And worth pointing out, it's had a rebound of around 17% since it hit a 4-month low in late March. Let's welcome to the COB Martin Crabb from Shaw & Partners. Good to see you.
Good to see you too, Juliette.
So as you said before we came on air, a bit of a fizzer today.
Yeah, it's 2 days in a row of hardly any movement at all. I mean, you're sort of sitting there looking at the screen all day. There's a lot going on. But when you look at the close, it's like, yeah, what a yawn. We could have not come into work the past few days and no one would have noticed. But lots going on beneath the surface. As you said, we're getting deep into the quarterly production results from the miners, and everyone's watching costs really closely. Are they hitting production? And what are the costs doing? The diesel costs. We've got Northern Star tomorrow. We've got other miners coming out this week, and just starting to get into US reporting season as well. So the banks are sort of out. What about the other tech companies? And then obviously one eye on the Strait of Hormuz at all times, right? So even though the market seems to be doing nothing from an aggregate level, there's plenty going on.
There is. So let's get to some of what's going on underneath the hood. And you mentioned the miners there. So iron ore, you say the cost curve here being pushed high by a lot of this movement in the energy crisis.
Yeah, so just reflecting on Rio's production result today, as you mentioned, iron ore in the Pilbara going quite strongly. They talked about the cost curve, which this is from S&P's website, so thank you to the good people at S&P. Their estimate of what the cost curve for iron ore looks like. And once you start getting up above $100 a tonne US, there's a lot of production there. So as the cost curve shift up, a lot of that production becomes unprofitable. So we're hearing stories of tonnes leaving the market. So as the energy costs go up, and diesel for some operators is a very big part of the production base. Not so much the Aussies. The Aussies are very low cost producers. Rio reiterated cost guidance of $23.50 to $25 a tonne. So just look on that chart. They're right down the bottom there. So they're very, very low cost producer. And they said that even though they're using 1 billion litres of diesel, 1 billion litres, Juliet, that's a lot, in the Pilbara, they've got other cost measures to keep to offset that. So they're not being impacted, but a lot of other producers are. So what does that mean? It means the cost curve moves higher, that supports the price. So we don't think about iron ore and fuel and energy being linked, but they are. So the miners are actually not a bad way to play a stronger for longer energy price. Like if diesel prices stay where they are at the moment, there's a lot of tonnage going to come out of the market. It's going to keep it tight, and that's going to keep prices supported. Very good for the Aussie as well, right? So we've got iron ore. We think there'll be upgrades across the iron ore miners on the back of this.
It's making me think of the hip bones connected to the knee bone. It's all connected,
It
isn't
all
it?
connected.
What about the banks? I mentioned Macquarie there at near all-time highs.
This stock was $190 at the start of March. It's now, it got within 60 cents of its all-time high, as you said, $242.90. As a long-term employee of Macquarie, I'm very happy to see the share price where it is. It's great. But look, this is very much a risk-on trade. So people get excited about Macquarie when the markets are doing well. Obviously, they're a big trader in the energy markets. They'll be loving this volatility. We saw the investment banks in the US produce some pretty good profit results. The M&A and IPO markets seem to be slowly reopening. There's a bit more M&A activity, and Macquarie is obviously very leveraged to that, as well as what's going on generally in the banking industry. So people are, when the market's selling off, people dump Macquarie. When the market's rallying, it's a go-to stock. So a bit of a high beta play, and that's doing very well.
Hub24 didn't have a good day, but you say still pretty good growth
Yeah,
story.
look, it's tricky with quarterly investment flow numbers, right? They talked about an institutional outflow. So we get these big platforms that go, right, we're moving $1 billion from platform A to platform B, or they're rationalising the number of platforms they're using. And so you get the, NetWealth, Hubs, Premium are the listed ones. Then you've got Panorama and Macquarie Wrap. So you've got all these big platforms, and money does move around. But importantly, the trend is your friend. So you can just see that the average monthly flow for Hub is continuing to improve, even though they had a slightly softer quarter than some market participants were looking for. That suggests this is still a growing business. So they got up towards $100. It's looking pretty pricey up there. Bit of profit taking today, a bit of people taking a bit of money off the table, but it looks like an 8% sell-off is a bit of an overreaction. You've got to look beneath the hood and ask yourself what's driving this inflow. It's how popular these platforms are with advisors. They make advisors' life a lot easier. They allow them to scale the business, deal with more clients. One of your earlier speakers was talking about the lack of advisors in the market. We need technology to make our advisors we do have more productive so they can look after more Australians, and that's what really these platforms are about. So they continue to do very well in all the surveys, so I'd expect that flow number stays good. So bit of a pullback today. If you don't own the stock, maybe you start having a look at it, but a little bit of profit taking in that one, probably a bit oversold on the day.
Let's talk more broadly about where we're at on the economic front, because we are expecting this rate hike from the RBA next month.
Yeah.
I mentioned consumer confidence still very much in the doldrums. We've got this energy inflation picture. What is the money market telling us about what happens after May?
Yeah, it's interesting. There's another hike probably baked in for the August meeting. So George Theron, who's our favourite economist at UBS, is saying February and May. And a lot of them were talking about the risk of further hikes. Like if inflation is printing into the sevens, which we think it could easily do at a headline basis, based on where fuel is, there'll be another hike. And you can see the 13th of April, which is just a week ago, the green line, the market was predicting probably a 50% chance of another hike towards the end of the year or into next year. That's now completely off the table. So in 1 week, the probability of that's gone to zero. So you can see that the futures curve peaks out at 4.6, which is exactly 2 hikes from here. and then it starts pricing in cuts. So it sees potentially the RBA responding to the higher inflation, and then as the economy softens, because at 4.6 it probably will soften a little bit, certainly those of us with a mortgage will start feeling the pinch a bit there, that they'll have to, the next move in rates will be down after that. So for those of us with mortgage, a little bit more pain to come, but then hopefully some light at the end of the tunnel, Juliet.
Yeah, and might be a very, very quick reversal as well.
Yeah, we've seen that already, right? They've U-turned a couple of times, and not the only central bank in the world. The Brazilian central bank hiked rates and cut rates. So, you know, there are a number of U-turns going on. Some countries have rates that are too low, they need to move them high. Some, as I mentioned, like Latin American, 15% interest rates in Brazil. I don't know how you operate an economy with that. So wouldn't be surprised to see the RBA overdo it in the hiking side and then have to quickly unwind that as the economy weakens. And
just more broadly, you're going to be staying up till midnight to watch Kevin Walsh?
No, I think if you're doing that, you're really struggling to have a social life. I think you've got to find something else to do. You've got to have a good hard look at yourself, as they say. Not me.
Not you. All right, Martin, thank you as always. Martin Crabb, of course, from Shaw and Partners. Well, we were talking about Hub24 then, and that was the stock of the day. Andrew spoke to our experts, Philip Pepe from Shaw and Partners, Rudy Philippek Van Dyke from FN Arena.
The impact is on many layers, and so they obviously are a leveraged play on share markets essentially, right? They're also a leveraged play on a market share that is increasingly shifting towards the independents in the sector, or the challengers, whatever you want to call them, and they are the best performing in that group. I've been a shareholder for a very long time.
The thing about analysts, they had a very strong previous quarter, very strong. And analysts like to click, copy, drag, and they forget sometimes that there was an anomaly that was positive in the previous quarter and it was never going to live up to those expectations, and that's what they did today. They had an institutional outflow, I think it was 200 mil, which muddied the numbers a little bit, but it was still a good result. It's just not as good as analysts had forecast, and when you're at 55 times PE, you cannot miss, because the perception is your price for perfection, so it's sold. So we're going to see some analyst downgrades overnight. As Rudy said, it was a 7% miss. Valuations will come down 7%. The quants will tell you don't buy stock after a downgrade. It will probably continue to trade sideways.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
Well, the market had a bit of a fizzer, according to Martin Crabb. Let's see some of the leaders in today's session, though. And Vulcan Energy had a good day, up by about 7%. We mentioned Droneshield, one of the top performers there, moving in with a gain of 5.5%. Codan, Silex Systems and Block also looking good. To the downside, though, today, Hub24 we've touched on, 4D Medical, Guzman y Gomez, Web Travel Group and Hyperion X falling. In the small end of town, Viridis Mining had a whopping 36% fall. And Energy World down, up 12%. It was up 36%, excuse me, it's the end of the day. Let's have a look at the laggards in the small end of town, and they were these stocks. Invictus Energy was down 12.5% amidst that fall that we saw in energy stocks. All right, let's have a look at what we're seeing tonight. Fed Chairman Designate Kevin Walsh testifying. Martin Crabb said you need a bit of a social life if you're going to watch that live. US earnings, we've got GE Aerospace, United Health and Intuitive Surgical. Also retail sales for March expected to edge up. Tomorrow, quarterly updates from BHP, Northern Star, Iluka, ResMed and Beach Energy, while we also get the Melbourne Institute Leading Index and Japan's trade balance for March, which is expected to improve. The COB 200 has closed pretty much unchanged from where we saw it this time yesterday, while the S&P ASX 200 has closed down just 4 points at 8,949, so also pretty unchanged, about 2 3/4% off its all-time records. We will do it all again tomorrow from 9:45 a.m. Eastern. Join us then.